Good morning and welcome to the National Finance, Housing and Investment Corporation's research webinar, State of the Nation's Housing 2021 and Beyond. I'm Tori Condon, NHFIC's Corporate Affairs Director, and I'll be moderating today's event. In the spirit of reconciliation, NHFIC acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This morning, we have two short presentations. First, we'll hear from the Centre for Population's Assistant Secretary, Merrick Peisley, and then from NHFIC's Head of Research, Hugh Hartigan. This will be followed by a panel discussion where we'll be joined by Stockland Managing Director and CEO, Mark Steinert, and NHFIC CEO, Nathan Dalbon. We would like to acknowledge NHFIC's board and the directors on the line today. Please send in your question through the webinar's chat function at any time, and I'll put them to the panel after the presentation. We have a bit to get through today, but we will try to get to all your questions. We're expecting a lively discussion, so we may not quite get to everyone's. Now, I would like to introduce NHFIC CEO, Nathan Dalbon. Nathan.
Thank you, Tori, and good morning, everyone. Thank you for participating in today's research webinar, and in particular, I'd like to thank today's panellists for their participation. I understand that Stockland are in the process of finalising their half-yearly results, so extremely grateful for Mark making the time to provide his on-the-ground perspective. For those who don't know NHFIC, we are a federal government organisation focused on improving housing outcomes, particularly affordable housing. NHFIC's mandate was expanded to include a research function which started last year, with today's event marking the second in our webinar series. Australia has a strong housing research network in existence. NHFIC's role is to generate new research and complement the work others are doing, and in particular create a bridge between research and policy. Last year, NHFIC's research team delivered a series of short targeted papers in the run-up to our flagship State of the Nation housing report released in December. That report highlighted a number of different forces potentially impacting on housing, some positive, some negative. Today's discussion provides an opportunity to reconcile those forces from different perspectives and assess what that may mean for housing outcomes over the next couple of years. From my perspective, there is clearly a great deal of momentum in segments of the property sector thanks to low interest rates and considerable fiscal stimulus. This has had the desired impact of stimulating demand at a time of significant uncertainty. However, this headline story is more nuanced. For example, there are significant differences between detached housing and apartments, and across regions and metro areas. Further, as this stimulus tapers off, there is the question of what sustains growth going forward, particularly if immigration takes several years to recover. There are also growing concerns that the momentum in the system is reigniting housing affordability issues. How we get the balance right around these issues is key, and I hope today's discussion will contribute to this important policy question. Back to you, Tori. Thanks.
Thanks, Nathan. Thanks, Nathan. I'd now like to welcome the Centre for Population's Merrick Peisley. Thanks, Merrick.
Thanks, Terry. My name is Merrick Peisley. I'm the Assistant Secretary in the Centre for Population. The Centre for Population was established in 2019 to be the Australian government's focal point for population expertise. And I'll just start my presentation. Yeah, so one of the main tasks for the Centre for Population is to produce a population statement each year. Our first population statement was launched on the 4th of December. The goal of the statement is to improve the understanding of Australia's population, how it's changing, including due to COVID-19 and the implications of that change. It contains nationally consistent and annually updated population projections on a state, territory, region, and capital city basis, and the projections go out to 10 years to 2031. The primary audience for the statement is those in government and organisations and stakeholders like you today. It's there to inform policy, planning, and research. The statement comes at a time when really quality and coherent population projections are critical to informing how Australia plans for and manages the impacts of COVID-19. The statement's got three parts. The first is the history of the population change in Australia, including what has driven change in the last 30 years. And the second, the future of our population with detailed projections for the next 10 years. And third, a technical appendix which goes into how to interpret forecasts and projections. Statements available on our website, population.gov.au, with underlying data and interactive dashboards. Now, in terms of key messages from the statement, very much COVID-19 has been not just an economic shock, but an Australian population shock. The Centre predicts that the population growth will decrease significantly as the severity of COVID-19 increases. Australia's population will still grow, but it's going to be 4% smaller, or 1.1 million fewer people by 30 June 2031 than it would have been without COVID-19. So put it another way, we think Australia is going to reach 28 million people 3 years later than we would have otherwise had been without COVID-19. So what's driving this? Well, it's very much the restrictions in terms of overseas migration. Those border restrictions have meant that, as we've sort of outlined, the pandemic will result in a net outflow of migrants for the first time since 1946. Softer labour market conditions in Australia and internationally will mean that we don't expect overseas migration to reflect pre-COVID-19 travel patterns before 23-24. And we very much expect that migration will be the key in terms of Australia's economic recovery, addressing skill shortages, attracting highly skilled people to niche industries, and increasing investment and supporting regional communities. Those three lines on the screen you can see are our scenarios that we have modelled. We have a central case, which we just talked about. We have an extended restrictions where we held in place restrictions for another 12 months. And then we have our COVID-19 scenario. You can very much see that we think it's as deep as it's going to be in terms of overseas migrants leaving the country. But with overseas, if we had, vaccine doesn't go well, something goes wrong, and extended restrictions go longer, it may not necessarily get as deep, but it will be certainly a longer shock in terms of overseas migration. In terms of the fertility rate, the Centre predicts that the natural increase will decline over the projection period, consistent with the long-run trend that was expected prior to COVID-19. The expert advice that we've received is very much that the fertility rate means that the COVID-19, I should say, means that Australians will delay having their children as a result of the social and economic uncertainties created by COVID-19. And we certainly expect this to be short-lived, though, and that although we, maybe that sort of, drop in the fertility rate maybe not as pronounced, that may be smoothed over, but we certainly think that what will happen there is that 80% of delayed births will be occurring within 10 years. And certainly that we think that people will delay having their first child, that shows that sort of bump in the second part there, where people sort of have children a little bit later than they otherwise would have had. Moving to cities and regions, COVID-19 is projected to slow population growth inside and outside capital cities. We also expect that it will affect movements within states. Net interstate flows are expected to shift in favour of areas outside of capital cities by 5%, with the exception of Northern Territory, where the pattern is expected to remain stable. And certainly within the statement, this is really a question that gets asked a lot of us, is kind of very much what's happening now with movement of people. And we've heard a lot about people sort of leaving the cities to go to regions. One of the pieces of work that the Centre for Population funds is the ABS Prime, or Provisional Internal Migration Data, because we felt it was important that planners in the private sector had access to more timely data on internal movements relevant to COVID. This isn't in our population statement, but it is on our website. And we can see that COVID-19 restrictions have reduced the number of people moving interstate in Australia, and has done so quite significantly. Moving interstate is down 11% in the last 12 months, 45,500 fewer people moving interstate compared to the previous year. Regional areas have had their highest net internal migration gain on record. And this is really driven by the decrease in the number of people moving from the regions to the capitals. You can see that first chart on the left, 25,500 fewer departures of regional area residents moving to capital cities. There's a slight decline in capital city residents moving to regional areas. And very much Melbourne has been a really big part of this story. There is a steep fall in internal migration to Melbourne. It's their biggest on record. They had a net outflow of 17,200 residents, which is 25 times larger than what has moved in the previous year. But that sharp drop is people moving to Melbourne. There's a little bit of an uptick in departures, about 4% of those in terms of residents leaving Melbourne and mainly to regional Victoria, but that sharp drop is those arriving to Melbourne. And whether or not, we get asked a lot of questions about whether this working from home is baked in and whether or not we're going to see this sort of pattern continue. Some published data, unpublished data here from the Department of Infrastructure's BITRA, or Bureau of Infrastructure, Transport, Regional Economics, that has worked with Houston Kemp to look at congestion. You can see the impacts of COVID on the congestion periods here, where Melbourne, after that first lockdown, that nationwide lockdown, all those capital cities have dropped significantly. You know, as you'd expect with a lot of people working from home, those restrictions start to ease across state and territories. Victoria has a second one. And very much what we can see is congestion starting to return to normal or back to pre-COVID levels. Not all cases, there are some that are still significantly below, such as Adelaide, but you can see most of them are starting to climb back. So it's really interesting to sort of see, we're monitoring this as much as we can in real time to sort of see whether or not this is going to continue, and it will have significant implications for planners and governments around the country. And just finally, aging. So COVID will definitely contribute to a faster aging of Australia's population. The median age is going to increase from 37.4 to 39.8 years, and the share of people aged 65 and over will increase from 15.9 to 19.5%. And that's particularly in relation to Australians are likely to put off having children. So part of that fertility effect that we mentioned before. There's fewer young migrants coming into Australia in the short term, which also improves the fertility rate. And that also means that we'll have those 1.1 fewer million people coming in will also contribute to the aging effect. And then obviously we have the existing built-in baby boomers and post-World War II migrants who are going to age past 65. And we very much think that aging is going to occur more outside of our capital cities and inside, given that that's already an existing aging population. So that's it for me. Thanks very much for listening. I'll pass over now to Hugh Hartigan to talk about the housing side. Over to you, Hugh.
Thanks, Merrick, and welcome everyone. Really looking forward to the discussion we're going to have after these presentations. And I'm just going to put my presentation up quickly. Hopefully everyone can see that. And can I give a special thanks for Mark from Stockland. He's a busy guy, so it's great we're able to have him here to get a really sort of on the ground sort of market outlook. And also thanks to Merrick. I think giving that population background is obviously pretty critical for, understanding sort of how many homes we need to build in Australia for, the types of population dynamics we're seeing at the moment. So I'll keep my presentation pretty short. It's really just a bit of a scene setter, but I'll briefly sort of go over some of the projections we put out in our first State of the Nation's housing report at the end of December. Hopefully, probably got a bit lost there given we didn't release it till mid-December, but I'll quickly run through that. Then briefly touch on some of the things that Nathan mentioned. Really, the important aspects of COVID are probably more the distributional aspects, how the shock is really affecting different regions, different geographies in different ways, but also different housing segments. And then I'll just briefly discuss some of the sort of the underlying what it means to talk about some of these underlying factors and what the underlying factors really mean for sort of rents and house prices. So just turning to my first slide, this is a national slide, so it obviously doesn't give the breakdown of what's happening elsewhere, but just at a national level, unsurprisingly, we're seeing a really big sort of collapse in household formation, and we expect that to be particularly this year and next year. Our report showed that we expect around 200,000 less households to form in 2021 and 2022. So obviously that's a pretty substantial shock. On the other hand, obviously supply was already recovering somewhat prior to COVID, but is also being buffeted by that stimulus and obviously the fall in interest rates that Nathan was talking about. Obviously, when we talk about housing underlying demand, we're really talking about household formation here. So this is, driven by two particular things. It's really, population growth, which is primarily driven by net overseas migration, but also kind of economic factors. If we can, recall back to sort of March, April, May, there were a lot of young people kind of losing their jobs. I think up to sort of 300,000-400,000 young people, they were on the front line in terms of the COVID hit. A lot of them moved back in, with their parents at the time, and obviously that's a net negative for household formation. So that's part of the story too. And obviously, as some of these things change, we expect things to recover over time. And I'm sure Mark will talk to some of the supply aspects. Obviously in our report, we sort of suggested that this does provide a bit of an opportunity for some catch up, over years where we haven't been able to meet that demand. So just pointing out what sort of, again, some of these distributional aspects that Nathan sort of alluded to. Clearly, the cities that are being most affected by this population shock are kind of your Sydneys and your Melbournes. We're simply not getting those sort of, 200,000 people turning up to Australia, and, 85% of them tend to locate in those inner city areas of Sydney and Melbourne, primarily kind of international students, and they're just simply not kind of in those cities at the moment renting apartments, which is why you're seeing a really, really big fall in household formation, particularly kind of in Sydney. And obviously in places like Perth, they're less, cities and other regional areas are just less impacted by those normal influxes of international students. Also, it's a segment story. Clearly, we're seeing a lot of the stimulus at the moment target at the detached. So our projections certainly show that, a real strengthening in detached investment this year. I'm sure Mark will talk a bit more about that as well. But obviously, the apartment segment less so, and that's probably, probably going to bear more of the brunt of this kind of shock. As I said to you, sort of a consistent story in those inner city areas of Sydney and Melbourne. We are seeing some recovery in apartments in the data at the moment, but, obviously that's going to be dictated to some degree by how this sort of underlying population story plays out, over the next few years. I think this is just a chart I wanted to put up because, we might talk about sort of house prices in our discussion, but clearly when we're talking about these underlying drivers of housing demand and the rate of household formation and how that compares to the rate of supply coming online, we're really talking about rents, and you can see there's a broad correlation there between rent growth and excess housing demand. So when the rate of housing formation is low, as it is now, we're obviously seeing weakness in rents come through, particularly in those areas affected by the shocks. Obviously, it's less of a house price story. House prices are more kind of driven by sort of financial flows and credit and interest rates, and I'm sure we'll talk a bit more about that. But I think that's a key differentiation we need to sort of make when we're talking about the underlying story. And just briefly, just some of the distributional aspects. It's quite amazing just to see some of the variance in the rents and vacancy rates across the country at the moment. We've got some areas, particularly in those inner city areas of Sydney and Melbourne, where you've got, huge falls in rents over the last sort of, 9-10 months. And if Tim Lawless is on the call, thanks for the data. This is sort of hot off the press. This shows the changes in rents from March to January just gone. So clearly that inner city story is a pretty weak one in terms of rents, but conversely, across the country in some of the major cities, particularly Darwin, Perth, you're seeing very tight vacancy rates. And in places like Coffs Harbour, I've actually got friends in Coffs Harbour that were recently moving and they literally could not find an apartment to rent at a sort of, at an affordable price. So there's a whole lot of those different and highly variant stories playing out across the country. Just a few little key themes and messages to kind of leave people with. Obviously, as Merrick alluded to, 1.1 million less people living in Australia, over the next decade. That obviously has a pretty big impact on the anticipated rate of household formation. but also the shock's likely to have very uneven impacts across the country, affecting geographies and housing segments in different ways. And that's obviously playing out at the moment in terms of detached versus apartments, and also that sort of inner city, particularly those those eastern seaboard markets and versus regional areas. The underlying story is really a rent story, not a house price story, and we can talk more a bit about that in the discussion. But I just sort of left you with some of the swing factors that are no surprise to most people on this call, really about how the vaccine rollout goes. Are the vaccines going to be effective? How we continue to sort of contain the virus. We've seen unprecedented levels of stimulus, particularly on the income side, and sort of targeted stimuluses like home builder. They roll off in the coming months. What is that going to do to demand for the rest of the year? And then obviously we've got a key story around interest rates, and particularly will we see the sort of rise of macroprudential? Will APRA have to step in at some point in time? Probably a low risk at this stage, but something to think about. And then obviously a declining unemployment rate and a reopening of the borders would obviously continue to be very positive for the rate of household formation. So I'll leave it at that. Keep my comments brief, and we can dive into the discussion and look forward to it.
Thanks, Hugh. Let's start the Q&A. I'd like to welcome Stockland CEO and Managing Director Mark Steinert, who is joining Nathan, Merrick and you on the panel. Now, please remember to send your questions in. We'd love to ask them of these panelists, and we don't get them here every day, so please send them through. Now, Mark, can I start with you? We've just heard from Merrick and Hugh on the underlying trends. And at Stockland, you see housing literally from the ground up. What's your view from the coalface for the year ahead?
Yeah, thanks, Sherry, and good morning, everyone. Yeah, it's an interesting environment, as we've just heard. A lot of moving parts, pluses and minuses. I guess the part of the market we're obviously most focused on is master plan communities in the growth corridors and townhomes in infill locations with a real skew to owner occupiers. So if we talk to that segment of the market, clearly that's where a lot of the strength has occurred. We reported that in prior periods, so there's nothing new in that. I've obviously got some disclosure sort of requirements to observe, but if we're looking at the markets as described, they have been seen strong demand. We've seen a strong response to low interest rates and home builder and state grants, and also I think a period where you didn't see prices moving, which combined, I think, made a lot of buyers think it was a good time to enter the market. And the big story is the first home buyer. I mean, the first home buyer has gone from 15 or 16% of loan applications to 25%. So that's a 47% increase. And you can see those buyers being stimulated to come into the market as a result of all those various support elements that I've described. So looking forward, we see obviously the home builder stimulus running off in March, and it's already been halved. Well, not halved, but it has been reduced. But it's fair to say that's been an incredibly effective policy. It's kept millions of jobs going in construction and has been a contributor to the broader economy. You've seen over 63,000 applications, well beyond what anyone expected. And that, we think that's brought the hidden vacancy out. So if you look at a lot of, you saw household formation or household head rates growing as people were staying home during the period of perceived unaffordability. A lot of those people have engaged with the market. So looking forward, we think there'll be some softness around the runoff in home builder, but the overarching underpinning support of interest rates half what they were and at historically low levels, combined with reasonable jobs growth and a lot of micro and macroeconomic support, spending on infrastructure, advanced manufacturing, etc., will keep the market in houses at least quite robust for the foreseeable future as it relates to this cycle. And we'll come to it, but I think a big thing we've got to talk about is returning Australians, because they're not in any of the official statistics, but I think they've been a big part of surprising everybody on the upside. I think you're on mute, Drew.
I'm back on. Thanks, Mark. I'm sort of curious too, as the CEO of a major developer, how you actually reconcile those market forces with the sort of structural forces that we're seeing, population, underlying housing demand. Do you focus more on interest rates and market sentiment or more on the underlying factors?
Well, we obviously have to look at everything, but when you're looking to historically, at least year to year, the big one is always interest rates. That's the most important, together with a reasonable jobs market. People have got jobs and rates are compelling. We historically have seen that drive strong demand. The other piece associated with that, I guess, is credit availability. So while going into the Royal Commission, we actually had a reasonable macro setting, but the tightening of credit availability had a big impact on the market, as we know from that fairly short but sharp downturn. Over time, though, of course, the rate of population growth and household formation is vitally important. It's been the key reason why we've had such strong economic performance in Australia, and it's the key reason, why house prices also grow through time, combined with constraints in serviced land. So if you looked at the headline, as has been described, it looks pretty dire. The thing that offsets that is we did come into this period with an underbuild, and we've had a number of years of underbuild. So that's partly offset. That's that pent-up demand I described earlier. But there's been 700,000 Australians that have returned to Australia since March. The net balance, according to the ABS data, between those arriving and those leaving is plus 700,000. That's about 4 years of migration. So now, of course, they're not all going to stay here, and they're not counted as residents at the moment, as I understand it. But having said that, the dynamics are this, we think. At the time when a lot of those overseas Australians go back overseas, and some of them won't, they'll stay, it's probable that you've got vaccination, broadly rolling through. People are feeling more confident about COVID. And that's going to be exactly the same time that people can actually come to Australia as well as skilled migrants. So there's lots of stories about gaps in the labour market already, where we don't have enough skilled people. I think Australia looks like paradise. I think people are going to be queuing to come in. It's going to be, obviously there'll be a lot of dynamics around that, but look, they're all forecasts and estimates and guesstimates, but you can make a reasonably constructive case for underlying net demand as well, which doesn't necessarily then see that big oversupply that Merrick and Hugh spoke to.
Well, Merrick, just going to that, what can you explain if there's going to be more Australians returning home than you may have thought, and what the impact is? And do you think we're going to have people queuing for paradise?
It's a good question. It's really good. And thanks, Mark, for alluding to that. It's certainly a hot topic and very much on our minds. We have had record Australians coming home, and that's very much something that we'll see probably our net overseas migration numbers be revised upwards. But when you look at the last 5 months data in terms of Australians coming in and leaving under the sort of quarantine restrictions that we have, we've had about 55,000 Australian citizens come in the last 5 months. That's not migrating, that's just them overseas arrivals and departures, that's just them coming in. But we've had about 60,000 leave at the same time period. So in some respects, we're hoping in a lot of ways that those Australians come home and stay home for a while. There's a lot of really volatile movements at the moment. We've had 50,000 students leave in the last 5 months. We don't expect them to come back. We've had 457 students arrive in the last 5 months. So, it's very volatile at the moment. And while we have, obviously this really, important health restrictions that we have to protect our country, you will see sort of some pretty volatile movements and at a very restricted rate. In terms of what is going to kind of happen a little bit going forward, we definitely would see no reason why Australia is not considered a real great country for a migrant of choice. Although there is competition around the world, we did see for example, the student market plateau a little bit before COVID. But certainly coming out of that, we have a great health system, we have a great vaccine program that's just about to roll out, and we have a really great quality of life. I think a softer labour market will be something that we'll be interested to see as to what happens with migration there. But certainly for us, we don't see any reason why migration won't return to really strong levels going forward.
Mark and Merrick, you seem to see a bit of a boost for the economy. Is if we do get more Australians returning home?
It should go up. Yeah, it could go up a little bit, but it's certainly sort of cautious times at the moment. I wouldn't, I certainly think in terms of the next budget, it'll be really interesting to sort of see what that recovery looks like.
Okay, we have some questions coming in, so I'll just direct one to Hugh. Obviously, everyone's so interested in the apartment market, Hugh. So the question is, what are your expectations for the apartment market? Will we see a decline in the market due to the lack of migration and the financial impacts of the pandemic on young Australians?
Wow, that's a pretty big question, but I'll address the first one. I mean, look, obviously our projections. I mean, it's fair to say that the outlook for the apartment market is probably pretty uncertain. I mean, if you think just prior to COVID, we had pretty big apartment booms in places like Sydney and Melbourne. Mark will probably be able to talk to that far better than I can. But obviously COVID hit. We're already seeing the apartment market come off quite substantially with approvals coming down. Interestingly, despite, obviously these sort of like broader underlying factors, we are seeing a recovery in the apartment market in some areas, particularly in cities and areas where vacancy rates are low. So I think they're going to be probably some of the drivers. Obviously we've got the interest rate environment is very favourable, as Mark was pointing to, but then probably for the apartment market, it's going to be a pretty uneven story across the country. Just thinking about that underlying story, what we're not getting at the moment that we probably had a few years ago was, the apartment market was very much supported by a lot of foreign investment. So five or so years ago, we're not seeing that foreign investment come in like it used to, and there's probably a range of factors, that are causing that. And obviously at the moment, we're clearly not getting that sort of demand in those inner city areas. So that's obviously changing the equation. But look, I mean, I'd be interested in Mark's view on this too. I mean, from a developer perspective, to some degree, I'm sure they probably look through, if they think the borders are going to reopen in a few years' time, then, and the financial conditions are pretty favourable to build, maybe it is an ideal time to kind of, get some partial catch up, for some of that underbuilding that Mark was talking about. But, that's sort of just a quick summary and thoughts from me, Turi.
Thanks, Hugh. I guess we're moving a bit to construction. I'd just like to ask Nathan a question. We're seeing some of this, considerable stimulus around building and, and building more affordable housing and social housing. Do you expect to see construction increasing in the next few years? And if so, what sort of role can a group like NHFIC play in supporting social and affordable housing?
Thanks, Turi. Well, I guess focusing on the social and affordable housing sector in particular, given a lot of what NHFIC does is focused on financing that sector. Look, I think certainly there's an opportunity there to focus on some of the structural and cyclical aspects. So by structural, I mean there's a long-standing undersupply of social and affordable housing across Australia, and it varies in terms of the extent of that problem across jurisdictions. And then in addition, if there's an opportunity to address some of that undersupply through some stimulus initiatives that we've seen, for example, from the States, that can also help in terms of supplementing the other initiatives that have been announced at the Commonwealth and the state level. So from our perspective, obviously the increase in the liability cap from 2 to 3 billion last year will certainly provide us with headroom to assist the state governments that have announced stimulus package focused on community housing providers. And I think also it's not just about sort of more money in that space, it's also about using the existing financing that we have as effectively as we possibly can. And as a business, NHFIC has been focused on trying to improve the financial offerings that we have and through partnering with the private sector and also improving the range of products that we have. So I certainly see there being a very strong opportunity for NHFIC going forward. And I think hopefully we can, as I say, leverage some of those initiatives and assist with construction from a short-term perspective, but then also make some sustained inroads into that chronic undersupply in terms of social and affordable housing.
Nathan, just one more question that's come in while you were speaking and the question is, what can governments and industry do? So I suppose we can talk to Mark about this as well, to plug the population gap that's looming ahead. But it's basically the question's asking the looming gap for apartment jobs in gateway cities. And what can we do, about supply, zonings, approvals? But the question is, so what can governments and industry do to plug the population gap looming ahead for apartment jobs in gateway cities?
So sorry, was that a question for me? I didn't.
Yes. So it's asking what can both government and industry do to plug the population gap in a jobs context? Yeah,
look, I think obviously there are different levers at play in terms of the population gap. So obviously there's the extent of the immigration, the net immigration, and having in place the mechanisms to facilitate the immigration levels to increase again, and obviously a lot of that is based on the COVID response. I think also that's one of the slides that was really interesting was the migration between the regions and the capital cities, and also across jurisdictions. So I think there's a range of factors that could help facilitate that, that go to the state government policies. And there's a range of, to assisting people to move, such as the conversations that are happening around stamp duty, for example, at the moment. And then there's also the local government regulations, that go to planning regulations, timeframes associated with facilitating, new supply. But I think Mark would probably have some pretty good insights, as well as Merrick, on that as well.
Mark, do you have a view?
Yeah, look, once again, it's a complex area because overall you've had some overbuilding, particularly in the investment grade product, where owner occupiers have been less enthusiastic. I think it's fair to say the apartment market for owner occupied stock in the right locations, particularly near good public transport and amenity, schools that are close to job sources, that type of inventory is actually holding up remarkably well and is performing much more like the house market in the growth corridors. So it's really been that more speculative investor product that's been more challenging, and that's driven up the vacancy rates, I guess, together with some of the Airbnb stock. In terms of the near city, I think it was interesting to see today in the fin, SQM data showing for the first time in a year, slight rental growth in Sydney apartments at 0.8, although house growth was about 6.1. And Melbourne was almost flat after being down double digits. So you're starting to see a little bit of balancing now that new starts have turned down, and there's a little bit of reduction in inventory more broadly. But I think the key there is we have to continue to plan this inner ring and middle ring in particular more carefully. And we've been talking about it for years, but a more deterministic approach, effectively, and a bit more flexibility probably around the zoning and enabling the approvals to come through more reliably and more quickly. And some of the value that's been lost historically in the delays transferred to government in terms of infrastructure payments, where you've enabled more value to be imbued to a site, where you've increased the density, and recognise that you probably are going to get inferior outcomes when you push significant density outside of the middle ring, because the revenues per square metre really make it difficult to build high quality vertically when you look at the rates per square metre. And so you start to get outcomes that actually aren't in the community's interests, unless it happens to be social and affordable targeted, and you can therefore allow for a below market rental or price outcome.
And Mark, we've just had a question that's come in, and it's one of those at the coalface questions. So it says, given you'll love this, given that a large cohort of your buyers have been first-generation immigrants who buy a home after their first few years in the country, what hit to your sales do you foresee in the medium term from the big dip in immigration this year?
Yeah, it's an interesting one. I mean, the facts are that over 90% of our buyers who are first, who are migrants to Australia, they've been in Australia typically for at least 4 years before they buy. So the pattern is they typically rent near city or rent somewhere, accrue savings, and then seek to buy a home. And buying a home for a lot of those migrants is a really important part of their vision for their family, and it's part of why they come to Australia. So if there is an impact, we would expect it to not really be overly material for that sort of 4-year period. But what we're also seeing at the moment is that some people that were previously thinking about being in the office every day and now thinking they're going to be working from home 1 or 2 days a week permanently, or working from a hub near their home. And as a result, they're trading off being in a growth corridor where they're recognising, like, a brand new home, designed how I want it, great schools, great amenity, great parks, walking pathways, good shops and facilities. And I can now jump on a train and get into the city in under 40 minutes. And that story applies in particular to Sydney, Melbourne and Brisbane. And if you go back, 10, 15 years ago, that wasn't viable because all these new train lines have been delivered and they've been redefinitional. And a lot of buyers are kind of starting to recognise the relative affordability and also the relative convenience together with that changing preference at the margin. And I'm not sitting here saying you won't see apartment demand and you won't see the cities continue to grow once they rebase, but you are seeing some rebalancing of economic activity, probably about, I think, permanently about 10 to 15% transfers into the metropolitan area that was otherwise focused on the CBD per se. Okay.
Obviously, immigration, some of these trends are interesting, but the other point that you picked up on earlier was another factor in the market, which was first home buyers. And we've just got a question that's come in, and Nathan, I might address this one to you. What does the spike in demand by first home buyers and generous state and Commonwealth grants mean for the broader state of housing affordability? I'll just send this to Nathan, given NHFIC manages the first home loan deposit scheme.
Yeah, that's a pretty big question as well. Look, I think it's very, very difficult, I think, to sort of trace through, how the stimulus will ultimately impact in terms of affordability over time. I mean, quite clearly, the figures that Mark, for example, referred to before in terms of a lot of the stimulus being a first home buyer story, reflects the fact that obviously a number of first home buyers have taken the opportunity and they've made an assessment from an affordability perspective that it's certainly worth the decision to switch from renting into purchasing a home. I think, one of the considerations, it's always, as I said in my opening comments, it's always about trying to get the balance right in terms of providing the necessary incentives without leading to excessive price growth, because then obviously it ends up being counterproductive in terms of what you're trying to achieve. But certainly in terms of the evidence, in terms of what we've seen in terms of the pickup with first home buyers, it suggests that it's certainly helping. And I guess going forward, that's going to be something that needs to be closely monitored in terms of the house price growth not undermining the objective of that stimulus. And I think as one of the questions I put up front, how do we get that balance right? Because you target one segment of the market, it obviously has implications through other parts of the market over time. And I think we're still seeing how that will play out, particularly with low interest rates and other factors providing that stimulus across the board.
Hugh, you've done a fair bit of research on this. Do you want to chime in on that topic?
Yeah, I mean, just briefly, I mean, Nathan summed up a lot of the issues, but, you know, clearly what we're seeing in areas in Australia at the moment is, you know, that buying renting equation has just turned around quite substantially, right? And if we think about first home buyers, clearly, you know, you can look at affordability in different ways, but certainly one of the main hurdles and the reason for the first home loan deposit scheme is the difficulty of saving up that initial deposit. You know, if you think about managing a mortgage, you know, at these types of interest rates with, you know, 3-year interest rates at less than 2%, clearly there's a lot of first home buyers that are getting that upfront deposit help, are making the decision that, you know, it's actually kind of more in their, you know, interest to kind of buy now, you know, obviously anticipating that over time they'll get, you know, some capital growth as well. You know, and I think that also comes down to this idea is housing is not just a roof over a head, it's also a financial asset, right? So it's a form of savings. And all of these kind of considerations go into sort of buying a house for a first home buyer. And I think that, you know, we might get onto a discussion later about aging, but, you know, clearly some of the more difficult things we are seeing falls in home ownership rates, particularly those sort of, you know, younger age levels. And, you know, this has implications for when people retire. There's a lot more people retiring with mortgages. And so clearly, you know, when first home buyers are seeing that opportunity, they're going for it. And probably the evidence suggests that over the long run, you know, if they're exposed to the market and they're in the market, that's pretty good for their savings and their sort of, you know, consumption smoothing over time. So that would be my contribution.
Okay, we've got a question that's come in from Merrick, I think. And really, Merrick, this probably goes to that slide you put up about aging. So it says, why does the population's age, but why does the population age because of COVID? And what sort of ramification does that have on housing? I think you showed that to a degree in your slide. So maybe it's the balance between migrants and natural population growth you might like to expand on.
Yeah, thanks. It is definitely a concern, and we'll have a lot more to say about this in the intergenerational report, which is going to come out at mid-year. But very much migrants, when we get them in, they're in their best years of their life. They're young, they're skilled, they go into work. We have a skilled migration program, and that also impacts on overall fertility. So they have more kids usually as well. And, you know, from a treasury perspective, more taxpayers. And so from that perspective, that counteracts and delays the demographic effect of aging, you know, in Australia's population, which is why skilled migration has an important part in keeping Australians young. And so that's why, in terms of COVID, when you don't have those people, that has an impact on it. But also with Australians delaying having kids as well, will also have an impact on that in terms of the aging population. Experts that we've spoken to sadly think that Australia's fertility rate, if you looked at that sort of chart that I put up before, the trend is only on one way, and it's heading down, and it's unlikely to trend back up again unless there's something, you know, that specifically changes it in terms of whether it's a policy intervention or any other sort of intervention. But for most part, when, you know, worldwide fertility rates are trending down, and that also impacts on the aging side of things. In terms of what that has impacts on the housing, I'm probably not as super qualified as someone like Hugh, Nathan, or Mark to sort of draw the implications on that. But certainly with an aging population we have in place, you know, obviously it has an impact in terms of household formation and where these people are. And if it's more aging in terms of the regional cities, like the regional centres and outside of capital cities, I think that will be quite, you know, quite telling on the regions. And that migration does have an important part to play in keeping our regional areas growing and keeping our regional areas young. And, you know, so some work that we've published in the past called Shaping a Nation's also sort of drawn out some pretty important implications for regional areas in terms of migration, you know, growing regional areas and keeping them young and keeping them vibrant. So I think it is a bit of a multifaceted story in terms of the population impacts there.
Well, it sounds like we'll have to keep our fingers crossed on Mark's optimism on that. Hugh, did you want to chime in on that at all?
Yeah, just a couple of comments. I mean, I suppose from a population perspective, you know, there's sort of an absolute number story and a relative story, right, in terms of, you know, the distribution of the age of the population. But just in a general sense, if you've got an older population than a younger one, then that obviously has implications for, the types of housings that, that's being demanded in the marketplace. And it also touches on a whole lot of other issues. I mean, ultimately, there's always a big story around sort of, right sizing housing. And I think that's probably an area in Australia that still hasn't quite, been dealt with. I'm sure it's similar overseas, but, when we've got impediments to sort of mobility, that's always going to be quite problematic in terms of ensuring we have the most efficient use of the housing stock, because otherwise it means we just have to build more. And given it's, there are some supply impediments at that supply side, that can take time, and obviously that can end up exacerbating affordability issues. And coming back to the story, just before, there are a lot more people retiring with mortgages these days. And so, really, there's an affordability issue at that sort of like retirement age as well. If a whole lot of people are entering retirement, without even kind of being able to own a home, that obviously has some pretty big implications for broader inequality and those types of issues. So, it's obviously a very, very big story with kind of multiple kind of angles, but, obviously right sizing is a great principle to have when trying to house the demographic you've got in any country.
Okay. I've got one question that's come in, and I'd just like to throw it open to the panel. So whoever feels they'd like to answer it. And the question is, how can we stop home values rising faster than incomes in the years ahead? That's a tricky one.
It's going to come down to planning, Jury. So planning, land use planning, and aligning the delivery of infrastructure at the same time. And it's great that every metropolitan area now does have a plan. Most of them are integrated around housing and infrastructure and employment and other usage. But the systems at the moment, in terms of how they're administered, are still, particularly the interplay between local government and state government, does create a lot of inefficiency, a lot of delays, which does add to the cost. And as I mentioned before, ultimately they're not making any more land, so you have to use it wisely. And the only way to really do that is to plan for the future and make sure there's an appropriate transfer of value. There's not a lot of point in government, not being coordinated, rezoning land, adding, transferring tremendous value to a lucky landowner that then gets transferred effectively to the price of housing when that land is sold to a developer like Stockland to then turn it into a master plan community and a better way of life for our customers. So, don't get me wrong, I'm not anti the process. I recognise how it is, but there's certainly a lot of opportunity in terms of what you would call a circular approach to planning, land use and delivery of housing. And of course, within that is social and affordable housing, which in the right locations, if you can transfer value through rezoning, you can create sufficient embedded value in a site to fund a lot of the social and affordable housing construction. But once again, that takes planning.
I can't let you get away today without asking you to get your crystal ball out and talk about housing prices. Can you give us some forecasts for this year? What's Stockland's thinking?
We normally release those as part of our results, so I won't be able to give you specifics. I think it's fair to say that for homes, standalone homes, the prices are going up. But nothing new in that. I mean, every major forecaster in the country has gone from -5, -10 to typically, I guess the average now is +5, +10, and there's a few outliers at +15. So I guess there's a lot of alignment there in the direction of values.
And do you see that flowing through into next year still?
On the basis that it's likely that economic activity will pick up further next year as we get to a point where state borders stay open reliably. It's likely that there's a reopening of skilled migration and foreign students, with tight controls to maintain, the health of the nation. And that you're starting to see you should start to see some of the initiatives around infrastructure delivery and advanced manufacturing and very deliberate government policy around, now job maker, to build on the prior stimulus, all of that combined, gives a pretty constructive outlook for GDP in our view, which will underpin demand. And, there will be that moderation, as I mentioned earlier, around home builder running off probably, so that, there won't be depending on which view you take, massive amounts of supply. So anyway, net, that maintains a constructive outlook. I'm doing my very best to not give you a number. But I think we should hear from Merrick, because he's the GDP expert, and will have really good views on the underlying outlook. And of course, the RBA's told us interest rates aren't going up for 4 years, so giddy up.
Well, it's good to hear positive. And sorry to put you on the spot. You did touch, we're just down to about the last question, and you did touch on, you were seeing some rents in the apartment market starting to improve in some of the areas that hadn't. Hugh's done quite a lot of work on that, and I'd just like perhaps Hugh to expand, now we've had prices, on what you see with rents, Hugh.
Oh, look, I think, the rent story is obviously just an uneven story, as I was talking about. Just to come back, if I may, just on that previous question, which I thought was a pretty good one on house prices. I think we're probably going to see a pretty different outlook over the next 10 years than we maybe have done over the last 10 years. And, the interest rate cycle, is at a very different stage. And if we think that interest rates have driven house prices sort of much higher than income growth would have, that's probably, basically we're at a different starting point now than we were at sort of 10, 15 years ago. So I just thought I'd add that in. But look, just on the rental growth story, I think that this is really going to be driven by this underlying story that I've been talking about. And I think ultimately our report, we showed that we expect real rents across the country, but that's on average to fall sort of, for the next 3 years. But, as I mentioned in my presentation, you're going to have very, very uneven impacts, across cities and regions and even within cities. And I think that's important to remember, and across segments. Renting a house in sort of, in a sort of middle ring in Sydney, you're probably not seeing much rent suppression there compared to, say, some of the rent falls you've seen in inner cities, say, for instance. So I think that's, expect the unexpected with rents. I think it'll be very hard to sort of, talk about any one single housing market over the next year or so, Turi.
Okay. Mark, I might just ask you this. We've had one last question, and then you're free to go, and I won't put you on the spot anymore. We've had a question about super funds' ability to invest in residential housing. Do you expect that, or do you expect any curbs on that? What do you think is going to happen in that sector?
Yep, I'm happy to answer it, but I would love to hear from Merrick on GDP after that.
Oh, sorry. Okay. Well, and then I'll wind you all up. So super quick on this, and then we'll go to Merrick.
No worries.
Put him on the spot.
So on super fund, look, there's a lot of interest. I mean, obviously it's a well-established asset class in North America and Europe. We have started to see some government change around zoning land use in Queensland or South Brisbane. You've got some contributions there to allow for affordable housing, and you've seen some waivers around GST. You haven't seen yet is the withholding tax, which is probably quite important would be quite important for foreign funds in particular, because they'll look at that withholding tax rate relative to other investment opportunities. But ultimately, I think there is very strong appetite for the asset class from pension funds overseas and super funds domestically, and it's always been about yield. So ultimately, I think that equation has got closer and closer as rates have dropped further and further. So I've got no doubt that Rubicon will be crossed, and that you will see very significant growth in that area. For us, I mean, we're now focusing on land lease because that's a segment of the market that is very affordable and has a decent yield attached to it still. But anyway, I think that will come into play.
And Merrick, any last comments from you, given Mark's thrown you under the bus?
Yeah, I mean, I have less ability to talk about what's happening in the upcoming forecast than he can. But I was going to say that you know, obviously we're forecast very much a recovery, and that's in line with the assumptions that we use, which is that we expect the border to open in the later parts of 2021, in the international border in particular, and that, you know, the government's already made some pretty good statements about when they see the population being vaccinated and, you know, returns to confidence and the like. I think we've got to weigh that with the risk of some pretty difficult times. And what I mean by that is that, you know, how quickly that border opens, it won't just be a snap and everyone comes in, will be certainly on our mind, and it will be sort of a progressive rollout, and what controls are in place. And it's not just us being vaccinated, it's the world being vaccinated as well. So I think there's some big challenges ahead still for 2021 and 2022, but we're certainly seeing more hopeful signs than what we did at the, you know, I guess this time last year.
Okay. Well, thanks, and thanks to everyone attending and listening who sent in all those really interesting questions. We've come to the end of the Q&A. We've run out of time, and I'd just like to hand back to Nathan now to close today's webinar. Thanks, Nathan.
Thanks very much, Tori, and thanks to everyone for participating today. I hope you found the webinar insightful and informative. I'd like to thank our panelists, Mark, Merrick and Hugh, for presenting and engaging today. A copy of this webinar will be available on our website shortly. If you have any further questions, please reach out to us, in particular our research or media teams. Thanks again, and enjoy the rest of your day. Cheers.
Hey guys.
Thanks, everyone. Thanks, Mark. That was great.
No worries.
Good on you.
Yes, soon. Bye.
Thanks, Merrick.
Thanks. Oh, it's fine. Thanks, everyone.